Preparing Canadians for retirement in both the accumulation phase and in the retired years is a huge part of this channel. So, in this video, I'm going to ask Shaun about some of the biggest complexities in navigating retirement that we see clients face and how you can either avoid entirely or overcome these complexities successfully. So, Shaun, I put together some questions relating to some of the conversations that we've had in the past regarding the complexities of retirement planning that I think will be really helpful for me and also people listening. So the first question is, why is retirement planning so important and why does it so often cause anxiety?
I think one of the main reasons it creates anxiety, and maybe that surprises people, it's not just about this exciting transition. You're not going in for work to work every day, working for a living, but it does have a little bit of anxiety attached to it. So examples would be something as simple as going from a regular paycheck to having to generate income from pensions, other sources of investment income can be a little bit anxiety producing for people. There's also a psychological aspect of the transition where when you're working, you always feel you've got a bit of a buffer, right? So if you've got surprise expenses, you just work harder, you work longer, and you can deal with the surprise expense events that come up. The economy, as long as you've got a solid job, doesn't create as much anxiety. Capital markets may fluctuate, but again, you're not retired yet, so you kind of roll with those changes. But it's not like that when people retire. They're more keenly experience some of the emotional roller coaster of uncertain markets, uncertain economy. Added to that, how do I generate income? What are the practical mechanics around that? And then as they transition in retirement, they'll be surprised by some of the emotional, psychological things that they will be impacted by. So structure, purpose, relationships. Retirement basically impacts on almost every aspect of their lives. And so it will cause anxiety, and it's sometimes just an undercurrent. People aren't even really aware of it, but they're wondering why they're not as excited as they thought they would be. And it's some of those reasons. We'll unpack some more of those reasons through this conversation.
Yeah, I think that's really good. It's tricky in that transition, right? Is that you go from relying on human capital to all of a sudden relying on the capital that you've accumulated over the years. And those are just they're just different, right? So
Exactly.
uncertainty is definitely tricky with that change. And so that kind of leads us into our second question here, which is what are some of the key emotional challenges that you've seen people face during retirement planning and how can they be addressed?
So that really leads into something I just alluded to. You now have more time. And with that time, what I've experienced, I've had to have this conversation with many clients, is it's okay to watch the news. It's okay to consume the news, but make sure you have a sense of perspective. So what you find people do is they begin consuming all kinds of content and they get pulled more into the drama that's going on around the world and all the upheaval that happens. And so it creates this generalized anxiety. And that generalized anxiety can lead to bad decision making by people. And so there's a whole bunch of reasons physiologically why that is. But as you're under low grade stress, when you're making decisions, sometimes you make really poor decisions. So part of your retirement plan needs to be, how do you deal with stress, anxiety? What are your practices around health and stress reduction activities? And making sure that you're counterbalancing the negativity that you're going to experience. So again, when you're working full time, you feel more resilient. When you transition in retirement, you feel a little bit more exposed. And so you're going to be more subject to that roller coaster. So you need to make sure you build in, like I said, ways of reducing anxiety, stress reduction, good overall health practices.
I remember there was a bit of a market crash at the end of 2024 and all the YouTube thumbnails on all the videos regarding the market were just red flames. And you're just
Yeah.
going through and the whole point was just grab your attention, cause fear, and make you click on the video. The next question I have here is how should individuals approach the emotional and psychological transition of retirement?
There needs to be a recognition that the retirement decision is a transition that you'll go through. And so there's going to be what we refer to as the letting go stage, the neutral stage, and then embracing the new reality. So whether you like it or not, a lot of your sense of purpose and meaning when you're working and going into retirement came from your colleagues, the work you did, the ways you were making contribution. And that whole world was part of what you did every day for days, years, decades. So you can't just all of a sudden leave that world and then transition into a new one right away. So you need to just process the fact that you are going through a transition, that you're letting go, that the person you were is now going through a transition and change. And there's some great books out there, and we'll have a link to a couple that you can take a look at that helps people really process that emotional psychological transition. So letting go, you're now moving into a different environment. There'll be a neutral zone. And one of the practical ways that we see people processing the neutral zone is many people don't really appreciate the amount of stress that they've been under. It's not until you leave that work environment that you suddenly realize just how much stress you're carrying on your shoulders. So in that neutral zone, there definitely is a period of just decompression, resting, healing, and just making sure that you're fully recovering from decades of work. There are a lot of good stuff, but there are a lot of stressful things. And so it's a natural process to go through that neutral zone in a process. And in that neutral zone, you're beginning to think about, work through what the new reality for you will be. How will you cultivate purpose and meaning? How will relationships change, and how will you redefine relationships in your life? Even if you're married and you have a partner, that relationship will go through a transition as you retire and you have to renegotiate those relationships. You're going from an environment where you are, have lots of relationships in terms of boards that you're volunteering for, work colleagues, different kinds of activities. Those relationships will change. And so the neutral zone is a very important component. And then eventually you're going to transition into the new reality, new patterns, new schedules, sometimes new relationships, new patterns to get meaning and purpose. And so there's definitely a three-phase transition that you need to be thinking about. And what we find is people who don't really grapple with that, I know that a lot of people that watch our videos, it's all about the money, and that's a really important component. But what I'm talking about right now can create health issues, and that anxiety can lead to bad decisions as well. So that three-phase transition is really important to be mindful of.
So that leads us into our next question, which is, what are some of the key financial mistakes and myths that hinder effective retirement planning?
There's a few. I'm always surprised at how people think that their situation doesn't warrant, proper planning. That it's a simple situation, or they don't have enough money or value in their portfolio to justify planning. And nothing could be further from the truth. So that's a bad myth to embrace. And in fact, it's probably even more important for people to engage in proper planning for retirement if their resources aren't quite as significant. Everyone benefits from a plan. Planning is really, really critical. Another myth or thing that comes up is just like, well, it takes time, it takes effort, and I'm not sure I have time to do it. I'm often surprised by that. So a lot of people don't have plans. They don't engage in proactive planning into their retirement years and what they should be doing because they're busy doing other things. And I think, you need to make time for this transition planning financially and in the other areas that we've talked about. It's really, really critical. And then sometimes what keeps people from planning effectively is maybe embarrassment. Maybe they think they should have made more progress financially and they don't want to sit down with someone to go over their finances and help, make improvements in their planning. Again, advisors, particularly if you're not a self-directed person, you're prepared to work with an advisor, seek out counsel and advice. The person that you're going to deal with is not going to be judgmental. They're going to sit down with you and do a great job helping you to make the most effective use of the resources you built up. As well, have some frank conversations. Maybe you want to retire soon, but when you look at the numbers, you're going to have to work a little bit longer because you're just behind the eight ball a little bit. It's not condemnation. It's not judgment. It's just reality. And I find that with people, when you confront reality, there's a real freeing up emotionally, and then you begin moving in a really positive direction. Another thing that happens is that some people are in delegation mode and they don't spend the time improving their knowledge and their financial literacy. And I think that one of our key responsibilities as practitioners and our team, Joshua, is helping our clients, helping people to be more literate financially, because the more literate you are, the better the decision making on your planning going forward. People who are not literate financially, economically, tend to be tossed back and forth by the winds and the waves of economic uncertainty and market volatility. Whereas those people with knowledge tend to make the high probability decisions. And we see it as a responsibility to help clients get there with good decision making through education.
Moving in more to the retirement planning aspect of this conversation, we talked about some of the myths and the mistakes that people make. What are some of the key financial questions individuals should ask themselves before developing their retirement plan?
So the first thing is look at the show notes. We're going to put a link in the show notes for a great questionnaire that I encourage people to go through. that helps them to be clear on a lot of the questions you should be addressing in your retirement planning. So again, go to the show notes. There's a document there around envisioning your retirement, what that looks like, what a great retirement looks like. But there's basic questions like, okay, when is retirement happening? What level of after-tax income do you need? When it comes to your after-tax income, have you taken into account a sinking fund for vehicle replacements every once in a while, well, maybe extra discretionary expenses? Many people are thinking this way, and that's the whole idea of go-go years, slow-go years, and no-go years. What about investment returns? Are you a conservative investor? Are you a growth investor? Are you a balanced investor? And does your plan take into account your investor profile? Obviously, your approach to your investments is going to have a big impact in terms of your retirement planning. Key to that is looking at tax planning. And a lot of times people will hire us because a lot of the areas they can sort of work their way through, but they are not sure how to plan out a deaccumulation strategy tax effectively. And that's a really, really important piece as well. And things like longevity. Do you have longevity in your family? How long do you want your portfolio to last for? And those are all key questions that retirement planning specialists will ask you, or you need to ask yourself. And it's not just, one time. It's not a one and done sort of planning. You need to be revisiting these questions on a regular basis because the inputs will change based on the on-the-ground reality of economies, interest rates, inflation rates. All those things are ever changing. You need to review the plan on a regular basis and keep asking those questions.
So we've talked about myths, some questions to discuss prior to developing the retirement plan. Now we have a plan. Is financial literacy really important for retirement planning? I know you touched on this earlier, but maybe elaborate a little bit on that.
Yeah, I think that we can't emphasize it enough. For some of you watching this video, you might be more delegators, right? I'll hire a professional and just expect they're going to do a good job for me. And they may be doing a very good job. But because you haven't engaged in the topics and you have not a lot of knowledge, sometimes there can be some surprising experiences along the way, right? So a good example would be that your advisors put together a retirement portfolio that is matched to your retirement plan. And it's a balanced portfolio, let's say a medium risk portfolio, which does have some short-term financial risk attached to it. You haven't invested any time understanding, what that actually means in terms of the year-by-year swing rate on the portfolio. And then when you go through a down market, you're surprised, you're shocked, you're full of anxiety. And because you don't have any, backup knowledge level in the area, you make a knee-jerk decision, or you maybe fire your advisor or change your portfolio or get out of the market, which may not be the right thing to do at that time. So that knowledge level should be something that is a collaboration between you and your advisors. You don't have to be an expert, right? You just have to have enough basic understanding so you don't get yourself in trouble and that you'll make high probability decisions and you'll understand at a basic level why your advisor's working the way they are in terms of the retirement income plan if you're hiring some. Now, obviously, if you're self-directed, it's not a relevant discussion. But I think even sophisticated investors, we've got some very sophisticated clients. When I ask them, why are we at the table with you? Accountability, encouragement, sober second thought. I mean, I don't want to be making these decisions by myself because I'm human. I can rationalize all kinds of decisions that may not be great decisions for me. So having somebody at the table to walk alongside me through my retirement planning is really critical. And that's the role that we play for people.
I'm trying to find resources to improve my financial literacy. Where can I go to find that?
Yeah, I think that the biggest thing is go to our YouTube channel. We've got lots of playlists, information on different topics. And some of the topics that I think are really relevant as it gets people in trouble is in the investment planning area. We'll have some links as well to some topic areas that will be helpful. But I think if you are relatively novice at investment planning, then I think getting educated in that area is really critical, is that's the area that will hurt you if you don't make the right decisions over time. The other is cash flow and budgeting and deaccumulation. So education on that is really critical. The number one thing that can get people in trouble in their retirement is their spending plan either was not realistic or they've exceeded it and they were too late in responding to the fact that they've exceeded it. And so those two areas, cash flow, budgeting, deaccumulation, and then, of course, investment planning are really critical areas to get up to speed on.
Okay, so we have a retirement plan now. An advisor is involved. So what is the role of a financial advisor, a coach in retirement planning? And is it really essential?
So, whenever I talk to people about this, I know it comes across a little bit self-serving, but it's true. And so the first thing I'd share with you, there's some great data and research that's been done over the years on how advisors can enhance long-term wealth for their clients. And in fact, that's what happens. And it's not rocket science. I'll talk about the main factors that drive that wealth. But the reality, and I alluded to this before, is that we're human beings. We're subject to emotion. We're subject to rationalizations that help us to justify bad decision making. It's particularly a problem for people who are kind of making decisions in isolation and they're not taking counsel and they think they're going in the right direction, but being human sometimes leads them to really bad decision making. So Vanguard did a study called, basically they called it Advisor Alpha, and they looked at the impact of clients who had worked with advisors to those who hadn't. So in the United States, people can go to the platforms and buy the ETFs offered by Vanguard directly, or they can build their portfolios with the, it just helps the advisor goes to Vanguard to build the portfolios by getting ETF products. So one group's non-advised, the other group's advised. And then they did studies and questionnaires, and they could also see the performance numbers between the two channels, non-advised and advised. On every metric, the advised households had better performance, had more peace of mind, were tracking towards their goals more effectively. And they said that there were 4 or 5 factors that were really driving that. So first of all, behavioral coaching, helping clients to be accountable when they need encouragement, giving them encouragement, deaccumulation strategies, asset mix strategies, rebalancing the portfolio, overall wealth planning and financial planning done and updated on a regular basis. And then they referred to the coaching model. They said, what does a coach do? A coach sits down, gets to know the client, to understand their goals and objectives, their pain points, their concerns, looks at an assessment of their current situation, identifies gaps or problem areas. So where do you want to be financially? Where are you today? What are the gaps? And then the specific strategies that need to be inputted to the client situation to bridge that gap. Once the strategy development takes place, then offering accountability and encouragement to make sure clients act on that so they don't, defer or not get around to it. The advisor really is that accountability coach to make sure things get done. And then reviewing, reassessing the plan, adjusting the plan along the way, and then reviewing the goals again. And that cycle is really, really powerful. We know that it works with dieting programs or physical fitness programs or that kind of thing. And it certainly has been proven to work in the financial arena where that coaching relationship, it's not a linear relationship, by the way. So it's not like every year the advisor team adds another 2 to 3% per year. But long term, those are the kinds of numbers that we're talking about. And that's over and above the investment portfolio returns. But it's nonlinear. It's responding to client volatility in their life. It could be a marriage breakdown. It could be retirement. It could be the death of a partner. It could be economic markets that are volatile. All those things sort of play into the wash of the value of a coaching relationship to step into the breach and to help the client make great decisions. And for, again, those people who seek out coaching, they typically have better experiences than people that fly solo.
Yeah, and I guess to tie this in the title of the video, but it's really in the complexities that the advisor really gives the alpha. If you're just throwing your money in an index fund and you're not touching it for 25 years, the role of an advisor is not really there. And I was looking at the conclusion of that study from Vanguard, and they had this one quote. So some of the best opportunities to add value occur during periods of market duress or euphoria when clients are tempted to abandon their well thought out investment plans. So it really is during complexity and volatility when all our behavioral biases are kicking in that an advisor can really add the extra alpha. So moving
and I see
towards,
that and I see that all the time. We talk to people all the time. So we've been in a pretty good bull market run for the last few years. Our team's been doing this for 30 years. So we've gone through lots of economic cycles. So it's kind of surprising to me, but not surprising. We've got a lot of investors now who are hurtling towards retirement. They've been very serious about their portfolios the last 5, 6, 7 years. They really don't know what it's like to go through a bear market. They really don't know what that is. We can think about it, we can intellectualize it. And so when that bear market hits, and it's going to hit, right? So we don't have a crystal ball on that, but that's when a well-organized, very disciplined strategy becomes critical. It needs to be in place before that bear market happens, ideally, so that the client can make great decisions through that period.
especially in retirement, right? If you hit a bear market when you're young, it's one thing, but when you're relying on the portfolio, it's completely different. And then we get to our last question. So the last question is, given the demographic shifts and challenges to government and corporate pensions, what's a key message for retirement planning?
One of the most important things in the area of retirement planning is you need to take personal control over your plan. You can't rely on your employer. You can't rely on government pensions to do it for you. You need to take active interest and engagement in the planning process. That's the first thing. The other thing is that demographics are going to be putting pressure on traditional systems that we've kind of counted on. So if you look at pension systems, there's less and less in the way of defined benefit pension plans. That will continue to be a trend within the country. So people will have to save personally or be part of group RSP plans or defined contribution pension plans. Healthcare costs. It's not news to anyone that our healthcare system is under crisis. But we will see some sort of fixes over time, and those fixes likely will be maybe higher taxes, maybe a movement to a mixed care system. But the reality is costs are going to go up. And we can look at our, parents or grandparents ahead of us where the system worked not too bad and their expenses didn't keep going up and up and up as they aged. Likely, when we look at people retiring over the next 20 years, they're going to be retiring into a different environment. So we've got a demographic squeeze, fewer baby movers, more people pulling money out of the system for healthcare and pensions, less people putting money into the system. That creates a squeeze financially. And as a result, the benefits, the healthcare programs, the things we've come to rely on probably won't be as robust. And we need to make sure we've got a financially sound foundation to deal with those challenges. You can plan for those things. That's why it's so critical to have a plan that contemplates those kinds of changes going forward. So, there's going to be some challenging times. I mean, again, if you properly plan, it's not all doom and gloom, but there will be some, inertia that we have to fight through because of those demographic changes.
If people want to plan, where should they go to get a plan?
Well, in the show notes for this particular interview, you'll see a link back to our website. So on our homepage, you can find out more about our retirement planning services. And as well, we have some complimentary resources as well that you can tap into. Get to know us a little bit, poke around the website. And then if you are serious about planning and would like to get your own customized retirement income plan, you can reach out to us from the website.
Perfect. All right. So if you made it to the end of the video, make sure you subscribe. There's going to be a lot of retirement planning content and just finance content in general coming out. So thank you for watching, and we'll catch you in the next video. Take care.